Check 1, 2.
Go! Curious about real estate?
Yes!
Then you've come to the right place. Get the knowledge you need. Get over the fear and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with podcast number 36. Today we have 5 questions from real estate investors who need to know. And remember, if you have a question, send it to support@bsffacademy.com. Support@bsffacademy.com, and we'll get your question on and answered. First question. Is there ever a time when an area is just too bad to invest in? For example, even if there are cash sales in a certain zip code, but it's a very high crime area, do you market to it? Folks, I've got to say, I have made some of the largest returns on really bad areas. I mean, so bad you wouldn't want to get out of your car kind of areas. One of the biggest issues we have with these areas is the crime and the theft on some of the houses we buy. But I can tell you, people in those areas, they love living there, and they sell houses dirt cheap that no one else wants them, and to fix them up and flip them, that kind of thing. So again, I've made some of my biggest returns on those areas. Now, you have to answer for yourself if it's dangerous to be in those areas. If it is, then I would stay away from them. If you don't feel that it's dangerous for yourself to be there, fall forward and buy houses in those areas. Again, man, if the numbers say you have a lot of cash buyers in that area, that means you have a lot of sellers selling their house at reduced values, and people like living in them, so you absolutely fall forward on it. Question number 2. Can you please explain the equity percentage feature in ListSource and what variables they use for the calculation? Gosh, I wish I could. They use an algorithm, and of course they're not going to give us their algorithm. However, what I have found, and I've been using ListSource for quite a long time, is I'm comfortable enough knowing that the number's relatively safe. Sure, is it exact? Absolutely not. There's no way for it to be exact. But because they're calculating data off of recent sales, they're calculating data off of when the loans were taken out and assuming some things about currency, that kind of thing, I'm safe in knowing that if they think something has 42% equity and it only has 40% equity, that's okay. I'm fine with that, which is why I start at 30% and I go all the way up to 100%. So I don't market to folks under 30% equity base. And I have yet to ever find someone who I thought had equity and didn't have equity. So for me, I like ListSource. They're not going to tell us how they arrive at all the data. They're not going to give us their algorithm. And they're the best provider that I know of. First American Title is the largest platform in the country, so I don't know where else to get the data. Question number 3. How does ListSource calculate equity if it doesn't use current balance? A great question. And again, really not a real big way to know that. However, they can use some logic. They can look at it and they can go, loan was taken out 10 years ago, 10 years interest rates were this. If all of the loan and mortgage payments were made on time, then the balance should be this. We know that the neighbors around the like-type properties are selling for this because they know all this stuff. I mean, it's all calculated in their database and their algorithm. Then the property equity base should be a value. And again, I have found it very accurate and accurate enough to fall forward on. And even if it were too inaccurate, it's still better than going to MetroScan, which doesn't have any equity database features to it. Because if you did that, then you're marketing to everybody. And I know everybody doesn't have enough equity for me to buy their house. And so I don't want to go that route. The shotgun approach to marketing isn't here yet. It will be here soon. I do believe that, but it's not here yet. Question number 4 is a scenario question. Mr. Investor set up his LLC as an S Corp to flip houses. Should he be using 1031 exchanges to save more money on taxes? Well, I don't use an LLC for flipping. I use an S Corp for flipping. I use an LLC for passive income. So for my massive income, I want to use an S Corp. And because my S Corp, its business is flipping, I don't believe those transactions are going to qualify on a 1031. Now, your passive income would qualify to be exchanged as a 1031, and you should absolutely take advantage of your 1031 exchanges. What happens a lot, especially after you've owned the property for several years and you've possibly refinanced it and you've taken the equity base out of it, you really have to do a 1031 exchange, because when you refinanced it before, that borrowed money wasn't taxable. Say you took a $200,000 house that you were renting out, you took $70,000 and you went and bought something. Well, then if you sold it without doing a 1031 exchange, then your profit would be taxable, but you don't have it anymore. You went and spent the money on something. So you kind of have to do a 1031 exchange for some of those reasons. Question number 5 is another scenario question. At what point in an investor's career should they hire additional help, as in assistants, negotiators, etc.? After you know how to do it yourself. Plain and simple. Because once we know how to do what we need to do, which is answer the phone, negotiate, file, buy houses, sell houses, all that kind of good stuff, then we should look at systemizing our business so we can get out of the technician role into the manager role, and eventually out of the manager role into the entrepreneurial role. But it's real hard for us to jump from the technician to the entrepreneur without learning all of the skill sets. And in fact, it would be very difficult to start a real estate investment business as an entrepreneur and never do the technician role, because how could you teach it? How could you write systems for people to understand how to do it? You just couldn't. So you have to be a technician. Once you're good at a technician and you figured it out, you don't have to be excellent at it, but you figured it out, you understand it, you can communicate it, you can write a system about it, then move into the other positions. Not a problem at all. Boy, it was a real quick day, but I appreciate the opportunity to answer the questions, and I appreciate you guys sending them in. Remember, if you have a question, send it to support@bsffacademy.com, and we'll get them asked and answered if I can. And just bringing it up again, if anybody goes and listens to this on iTunes, if you could rate us or rank us, or whatever they do over there, that'd be great. Get more folks involved. I appreciate you. Until next time, bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.